Folks, we have a repeat of 2008 going on right now in Florida's housing market. We're seeing a major sell-off take place. And this sell-off, it has the potential to cause a massive collapse in prices on the order of 30, maybe even 40% in certain parts of the state. And as I continue walking here, everyone, I'm just seeing more for sale signs. It seems like a lot of these owners, whether they be builders or investors or people who own second and third homes here, they're trying to get out of the market near the top. And a lot of people, they said to themselves during the pandemic that Florida wasn't going to crash this time. They said that Florida was different, that people would continue moving, that remote work changed everything, that all the people from New York and California would keep moving here. But predictably, as I've been warning you all the last 2 years, those trends weren't sustainable, especially with how expensive Florida has become over the last 3 years. I mean, the appreciation levels, they were just insane. Prices going up 50, 60, 70% in only 3 to 4 years. I mean, of course there was going to be a correction. Of course there was going to be a collapse in many different cities. And today we're at the beginning stages of that. So if you're a home buyer in Florida and you go out and look at houses, it's still going to appear like prices are very high. However, the thing that you want to look out for and watch out for, and the thing that's going to kind of tell you if your market's going to crash, is the trends in inventory. Those inventory levels, the sell-off that's occurring. Like, is there a sell-off occurring in your neighborhood? Well, if there is, price declines are likely around the corner. And in particular, in this zip code here in Cape Coral, the number of homes for sale, are you guys ready for this? Like, I'm going to show you how much the number of homes for sale has gone up, and I don't know if you're going to believe it, so just get ready. In this zip code, 33993, there's currently over 800 homes for sale. Now, 3 years ago, everyone, get this, there was only 80 homes for sale 3 years ago. So in the span of 3 years, there's been a 1,000% increase in the inventory on the market due to all these people selling off, as well as a reduction in buyer demand. Now, 3 years ago, that was a very low inventory environment, so maybe it's an unfair comparison. So let's rather compare today's inventory level to the long-term average, which is what you should do if you're a buyer and investor trying to track the market. Compare it to the long-term average on Reventure app. You can search every zip code in America on Reventure app to see the inventory trends. And you can note in this area, the inventory levels are more than double the long-term average. And when inventory is more than double the long-term average, that's telling you a huge shift has taken place in the market, a shift on par with what we saw back in 05, 06, 07 at the beginning of that last crash. One big issue here in Cape Coral, as well as many other parts of Florida, are the home builders. And right now, I'm gonna take you to a home building site where you're not going to believe what you're about to see. So folks, we're driving to this home builder area right now where I'm going to show you some crazy price cuts. But I just also want to give you a sense of what this area looks like, Cape Coral. It's a lot of these cinder block style home construction houses. Additionally, you also have some condos and townhomes on the water with all these canals coming through. You could tell it recently rained here. And when it rains here, it gets really wet. This is an area that actually got hit really hard by the hurricane about 2 years ago or a year and a half ago. The hurricane came through and ripped through Cape Coral and Fort Myers. And ever since then, the housing market and economy here has not been the same. All right, everyone, I have my sunglasses on. Hopefully that's okay. I don't want to keep squinting at you. It's pretty bright out here in Florida. It's also kind of muggy. It's like 90 degrees, 85% humidity. If you've been to Florida, you know what I'm talking about. Well, this is the home builder house I want to show you guys. You can see the for sale sign right there. What's amazing is that the builder on this house, they've cut the price by 32%. They originally listed it in September of 2023 at $850,000. They've since cut the price down all the way close to $560,000. And you look on the inside, this is a pretty nice house. It's a good looking house, and from the outside, it's also good looking. Unfortunately, doesn't have a pool, not on the water. Those are issues here in Cape Coral, and as a result, very few buyers, and they're likely gonna have to cut the price by more on that house. Because as I walk around this neighborhood, which is about maybe a 7-minute drive from the last neighborhood I was in, you're gonna see there's actually even more homes for sale in this neighborhood. And immediately you can see we found another one here, Taylor Morrison, that's a home builder. They're selling this house here on the corner. The house we just saw is over there. So new build, right across the street from each other. And as we continue walking down, you're gonna see even more. But what's amazing to me, everyone, is how most of these sellers, they don't seem to have a clue about what's going on. I mean, the list prices, they're still so high compared to what the fundamental value of the property is. And these houses are just sitting on the market for 80 days, 100 days, 150 days. So there's still a lot of stubbornness out there in the market from sellers. I actually think just a lot of them are just not informed, actually, on the trends in the market. Because if you were to just take a second to look at the inventory trends for this zip code, you would know it's not a good idea to overprice your house if you have any intention of selling it. You can see here we got another listing just down the block. So we had the Taylor Morrison house over here. We got another house over here. And you can see we got another house here for sale. The sign says here it's loaded with upgrades. And I always think it's interesting when like the sign says something like that, like loaded with upgrades, because you know, it's like kind of a marketing tactic. And I say to myself, when I see a marketing tactic like that, I'm like, why are you trying to do that? Like clearly you're having trouble selling the house if you're doing something like that. Here's another home for sale just across the street. We can see this one, it's listed at over $1 million. I don't know who's gonna pay $1 million in Cape Coral in 2024 with mortgage rates at 7%. And the reason I'm showing you all these listings, everyone, is because I want you to connect the data on the inventory to what's going on the ground. Because when you look at the data and what's going on the ground, you can see how we're getting a repeat of the mid-2000s, a repeat of 2008 in Cape Coral. And if we go back to the last crash in 2008, prices here dropped by 60%, everyone. Can you imagine what it would be like to experience a 60% home price decline? That means that if you bought a house, say, for $400,000, it would be worth maybe $150,000 to $160,000 at the end of the crash. And such a big downturn, that has the potential to completely annihilate and evaporate an economy. And you know, one really interesting thing, everyone, is that a lot of people aren't connecting the dots on what's happening in the housing market. As I leave this neighborhood I was just in and going to drive you to the next one, is that more and more people are just saying like, oh, Cape Coral, no big deal. Austin, Texas, no big deal. Boise, Idaho, you know, those are outliers. These are the markets that have crashed or are crashing right now. And I think a lot of people are just saying like, oh, those were boom towns and that's not going to spread to the rest of the US housing market. But you have to remember, everyone, if you go back again to the mid-2000s, it wasn't as if all the markets crashed at once or even all the markets crashed. Back in the mid-2000s, there was certain cities that led the downturn, particularly Las Vegas. That was one that led the downturn. Back then, prices there started going down in late 05 into early to mid 06, well before the rest of the market. Similar in San Diego. San Diego is a market that led that last downturn in the mid-2000s. And so, you know, it's different markets this time that are leading the downturn. But the point is, the most exposed and the most speculative markets will always go down first. The markets with the least fundamentals behind the home prices. And that's what's happening right now. And so we have some markets that are more stable or more secure where we're not seeing any type of downturn. But at some point, this will spread, everyone, especially when there's an associated economic downturn. And I think that's another piece that people are missing and forgetting. They think that just because we haven't seen a full-scale recession yet in the economy, that somehow we won't ever see one. And of course, that's faulty and foolhardy thinking. I mean, a recession is eventually going to come. I mean, it might already be happening. We're seeing all these reports of skyrocketing credit card default rates, skyrocketing auto loan default rates. We're seeing big consumer companies like Home Depot and McDonald's and Starbucks issue all these ominous warnings about the US consumer. And so that's a piece of the equation that also needs to be considered. If you're buying a house, if you're an investor, if you're selling a house, understand that there's also economic downside as well. And folks, I was just driving by and I found this price cut. I wanted to show it to you. So this is a house, it's been on the market for 8 months. Originally listed at $405,000. 3-bed, 2-bath. You can see this is like your typical Florida home built like 30 years ago, tile floors everywhere. Probably is gonna need an upgrade pretty soon. So they originally listed at $405,000. They've cut it to $365,000. So they've done a $40,000 price cut, 10% reduction. Now, that owner bought the house back in 02 for around 100 grand. So they have lots of equity. So, theoretically that owner could cut the price by a lot more to liquidate the house, but they're not. They're just waiting and incrementally reducing the price. And this is what a lot of sellers do. And it's one of the reasons why this housing downturn has been slow in many parts of America, is because a seller gets an idea in their head about what they think their house is worth, and they don't want to budge from that. Once they get their idea in their head, they heard their neighbor 2 years ago sold their house for something, they're like, that's what it's worth. And unfortunately, it takes a long time for many of these sellers to come to reality. And it's, indisputable that in this area of America here in Southwest Florida, we are in a major downturn. When you look at the inventory and price cut figures, the days on the market, everything says we're in a major downturn, but most sellers don't want to acknowledge it. And actually, the smart sellers are going to be the ones that look at the data and say, okay, if I want to sell this house, I'll price it reasonably so I could sell it. They could use the data on Reventure app to do that. You could search your city on Reventure app and see the home price forecast score for the next 12 months. Here in Cape Coral, home price forecast score is below 30 out of 100, which means heavy downward price pressure. It indicates that if you're waiting to sell or your house is on the market, it's just going to get worse. So you might as well get it over with if you want to sell it. Conversely, as a buyer, you can use this data to make much more educated decisions about when and where to buy and how much to offer on a house. Again, if you're in a neighborhood like this, where we have, a repeat of the early 08 situation going on right now, but we still haven't seen the values collapse, you could use this data to exercise caution. And, one thing you want to be sure of is that if you buy in a neighborhood like this, you don't catch a falling knife, and that you don't buy at a price that you're going to regret. So what you should do, everyone, is track this data month by month, because it's going to help you make a more educated and informed decision about buying a house, buying an investment property, or selling a house or selling an investment property. And to do that, go to www.reventure.app, access all this data under the premium plan, which is $39 a month, which is ultimately a very affordable price compared to the cost of buying a house. Having the confidence to proceed and make your decision with data on your side, that's invaluable. So if you've been someone who's been waiting to join as a premium member, go to www.reventure.app and do that right now and check the overvaluation rate and home price forecast score for your zip code.